Welcome, new episode of the Market Reporters. We always talk about financial markets every week, what's happening in the market and what's especially happening with our investors. And this week we are going to talk about a sector again, a new sector, but unfortunately because it's in the news this week, and unfortunately because the Hurricane Milton was really powerful and made a lot of damage. That's a really bad situation. Well, what's happening in those cases with hurricanes or with nature, big nature items, that insurance companies are getting more important. And today we are going to talk about home insurance companies, but also how does the market work with the reinsurance companies and which companies within those markets are affected and where are the possibilities. There we're going to talk about it. I think the insurance market is a really huge sector within investing. So every investor should be aware of the sector.
Absolutely.
And know a little bit how it works.
Yeah.
So that's our goal of today, I think, Martin.
Definitely. Now, I think in the first instance, you might think that the home insurance companies itself, they will suffer big losses because they, of course, insure the home. But what is, I was going to use the word funny, but of course not funny. But what is interesting to see is that it's actually not so much the home insurance companies that are getting hit, but mostly the reinsurance companies that are getting hit. And if you look at the stock market on Monday when Milton hit Florida, AC Arch Capital, Everest Group, Renaissance Ray Holdings, they went down all between 7 and 10%, so really big hits. If you're looking at more Florida-focused home insurance companies, I'm talking about companies like Chubb, Travelers, Progressive, but also Berkshire Hathaway, funny enough. Berkshire Hathaway B shares, they went down between, let's say, 2.5%, 4%. So half of what the reinsurance companies were getting hit. And you see that some companies that have big exposure in Florida, reinsurance companies in this case, they were getting hit, and so their business is mainly focused on that area. Of course, it's logically they went down with almost 20% on Monday. So really big hit. So they lost almost a quarter of their market value on the stock market. You see that many of those reinsurance companies, and Casper will explain exactly how they do that, what the business idea behind it is. They are trying to limit Florida, and I always have this thought: why would you go if you know each year it's happening? Each year it's happening every year.
But they pay, I think if you have...
No, but why would you live there?
Why
is it
do you
such a
live
popular
there?
It's like you know that every year it's coming back. I mean, you got Wilma, you got this, you got Irma, you got blah blah blah, everything. And it's always around this time of the year, between September and end of October. It's always, you can take a pill on it, boom, hurricanes. But anyways, how do the insurance companies work?
Yeah, so you have companies where you have your
policy.
Sorry?
Your policy.
Yeah, your policy. And then most of them, they use reinsurance company. It's also depending on how big your insurance company is. If they're really large companies, so they have a big pool, they don't need to reinsure everything. They only reinsure a little bit because the risk of a certain event is less impacting their whole financial situations. So insurance company can reinsure its whole risk or a part of the risk. So that's a proportional or non-proportional. And in the US, there are also rules and regulations about this, what kind of percentages they need to reinsure. Otherwise, the impact is too big because, if you have a small local company and something happens again, they can go bankrupt. But all the people that have the insurance they have that insurance with them, they're also losing. So there are quite some strict rules and regulations around. I think it's good. But there is also another way of limiting their risk, and that is by giving out bonds, cat bonds. And so because then they say, okay, we think that this year there won't be a big hurricane in Florida, and you can buy in the financial market, you can buy a bond, you get a really high return on it. So you're betting, so you bring the risk not to another company but to the financial markets. And there is also a way of working together. So the companies, they create a pool to become on the background, to become less risky by putting everything in the pool. And so if they reinsure them, not with another company, but with a pool. But I think most of them, for the small companies, they use it. And if you, from an investment perspective, you should be aware, and you should know, and you should decide: do I go into a normal insurance company? But then you also should know, where are they active, how big is their risk, and how do they work with you. You should know, as an investor, how do they reinsure their investments, and do you like that way? That's I think, especially what you see this week, I think that's the most important question that investors should ask themselves.
Yeah. What you also see is that what's done by a lot of the U.S. parties, U.S. reinsurers, that they look on the foreign market, so they go to global players, because those global players, they spread the risk. Of course, they have part of their risk is Florida, but it will possibly also have part of the risk is Southeast Asia or whatever other region, or maybe Germany with there's always a lot of floodings going on in winter, in autumn time. So they spread the risk over different areas, and the biggest players in the world field in this case is Swiss Re and Munich Rückversicherung, Mun Re, to say it like that. And both Swiss Re and Mun Re have still significant exposure to Florida. But what you see is their approach is quite different. Where Munchen Rück is looking, okay, where the money is in Florida. Of course, there's the policies. They are high. We can make a proper estimation. We can hedge our risk. They've been really aggressively expanding their exposure in that area, mainly to grow their market share despite all the challenges. And if you look at Swiss Re, they've been more cautious. They've been actually reducing their exposure in Florida, almost between 50 and 80% over looking at which period, so the last decade, to say so. You see, in general, there is a tendency that the global players are trying to reduce the risk in Florida, because also what I just said to you, I said, why are you still living there? Why? Because it happens almost every year. That area is affected so often, so you rebuild it. It's a little bit, Casper, as the roundabout in front of our office. Similar like that.
Yeah.
Every week we have an accident in front of our office. The same thing happens in Florida. Every year, October, November, you have
and in this case, it's almost every, but it's always in the night. So
Yes.
it's in the night. So this is also in after the summer, and this is always in the night. So this morning when we came in the office, the fence was broken, the car was already gone. There was in front of the door, there was a piece of the
metal.
It was.
But the hilarious thing is that it happened. We're saying it in this vlog, and it's obviously it has no news value for you, of course. But they just fixed it yesterday again.
Yeah, it's
terrible. But anyways, that's something about here. But give us some funny facts about that reinsurance.
So
business.
the reinsurance companies, there are quite some different kind of, I think I would say, companies and people. They make the biggest bets. Because the normal companies, they reinsure a lot and they take the bets. So they are also gamblers, but they have, of course, intensive models, and they, based on the models, they can they make their predictions, and based on that they know what to charge. But still, they have the biggest risk, and that's you see also on the stock market. The ones that were hit the hardest were the reinsurance companies, not the normal companies. Also, they mitigate their own risk by giving out the same kind of bonds that the other ones do. So they bring the risk a little bit to the financial markets, and they work a lot with predictions. And every year they have in Monte Carlo rendezvous meeting where all the big players are coming together. It's a little bit like a bit strange setting, because why they come together in the most expensive place in the world? And what are they doing? Because there are only a few big players. What do they agree on there? So I think the reinsurance companies is a different kind of way of working, and you can reinsure almost everything with them. For example, Munchen Rück, you could insure space travel. And I remember I had an uncle, and I think it's maybe 50, 60 years back. He also worked in the Netherlands with an insurance company. And back then you could insure everything. So you say, okay, I want to, I think it's going to rain tomorrow. I'm going to take an insurance on that. And then, okay, it's raining and I get paid out, because it was used for the farmers. And my uncle was a better. And so he used that a lot. But it's also, if you have the best poker players in the world, they are betting, but they know what they're doing and they make money. Exactly. So there's also with those, they play a high risk game, and it goes well all the time, most of the time, but not always. And the one that you just mentioned, Swiss Re, has a big famous building, the Jerking in London. And it looks like a cucumber. Jerking, and I think it's one of the most expensive buildings in London. So that says something. They do something right, I think, on the long term. Deep dive.
Yeah. So if you look at the market itself in the US, I focus mainly on the US. The two players that if you look at what's now been the best player, what's been the worst player, Renaissance Re Holdings R&R has been the best performer.
Is that insurance or reinsurance?
Reinsurance company.
Okay, yeah.
Renaissance, you can many times see it when it has the name and it says RE.
Yeah.
Then you know it's a reinsurance company. It has been outperforming all of its competitors for almost 20 years. And if you look at the stock price in 2004, it was trading around almost 40. Now it's at 280. And the funny thing is what I said also in the beginning, if you look at all these stocks, I have a table which I've shown to you initially in the vlog. You see that they have really low price earnings. So they make quite a lot of money. And that is reflected in the PE. In this case, they make $50 earnings per share. So you generate $50 earnings per share. So that makes a PE of 5.5. And also what is funny to see with this company is they have a lot of assets, almost 31 billion, and the debt is only 1.8. So they have really good ratios in that sense. Dividend-wise, they are not paying really high dividends, almost like 1.5%. It's not really worth mentioning. The worst player was Sirius Holdings. They got really badly hit by Hurricane Katrina in 2005 and Hurricane Maria in 2007. That forced them to do a financial. They almost went bankrupt just in the nick of the end of the time. They managed to get to a financial partnership with, in this case, Third Point Reinsurance, and that created a new company that also has a listing on the stock market called Sirius Point. They're quite a lot smaller than in this case Renaissance Re. They are worth they have assets around 10 billion, and they also have slightly higher debt, but still not as much. 10 billion versus 800 million of debt. So those were the players I think that caught my attention. So the worst performer, Sirius Point; best performer, Renaissance Holding.
So unfortunately, a bad week, especially with the people living in Florida, and it's affected in a lot of sectors, and mainly I think in the insurance sector. And then we wanted to give you some insight. How does it work? Yeah. What are the main players? And if you are an investor in it, you should be aware of the fact: do I invest in a direct insurance company or a re-insurance company? And what kind of what's the difference? How do they work? And
or should you now invest in or make a study on what home building company is active in Florida? Because they will obviously benefit from this.
Yeah, so do your homework, and hopefully now you know a little bit more about the insurance company, and good luck with your investing. Thank you for watching. Give us your time.